Hi, Jonathan York, Bay Financial Partners, looking at investment markets. What a week it's been. Really all started with on the back of the very strong unemployment report from the US. Created around 200,000 jobs. They're expecting around 170,000. That then sort of led to realization that interest rates may have to go up. Certainly they will do. They, artificially too low in the US at 1.5% on the Fed funds. Rates do need to go up. Realization then started to come through as well that potentially there might be a little bit of inflation out there, which again, central banks have been trying to get into these economies over the last sort of 2 to 3 years, and really inflation has been pretty benign. What it led to then was, really a pretty major sell-off sort of Saturday, New Zealand time, and then following through again on Monday. And really, the Dow had a pretty big fall in terms of points. Was down over 1,000 points on the day, which was, one of the biggest falls of its time. But really, again, it's got to be put into percentage terms. That's coming off a handle of around 25,000 on the Dow. So it was only down around sort of 4.6, 4.7%. Which, although it's still a reasonable fall, it's nowhere near as big in percentage terms as sort of obviously the crash in '87, which was down over 13, 14%. Again, you put it into context. Just after President Trump won the election back in 2016, the Dow was around 18,300. When it started to fall, it was 26,000. That's over 30% increase in sort of 15 months. Also as well, in January, the Dow was up just over 8%. A lot of analysts and economists have been calling for a little bit of a correction. The issue is we've got the correction in sort of 2 to 3 days rather than spread over sort of 2 to 3 months. And certainly on Monday, US time, it really was pretty much panic liquidation out there. The market was pretty much in free fall. Interesting though, professional fund managers were saying, they were seeing good buying opportunities, and they weren't seeing any sort of mass panic selling from their clients. They were looking really for buying opportunities, which many managers have been looking for over the last sort of really 3 to 6 months, as the market has just, almost just gone higher pretty much every day. There's been very few pullbacks. And really, this sort of fall now is viewed as a good opportunity to get back into the market. Certainly, if you look at the fundamentals, global growth is still pretty good. You've got still a low interest rate environment, even with the interest rate increases going through in the US over the next sort of 12 odd months. The Fed's expected to increase rates 3 times. You've got a falling sort of unemployment rate. You've got to say a reasonably good growing economy. You've got good employment, and that will then sort of filter through into more cash circulating in the economy. On top of that, certainly in the US, you've still got the tax cuts to really sort of hit home. They won't start hitting home for the individuals till sort of April, May time. Over the last 12 months as well, the Dow is still up over 20%. Interesting, oil is coming off a little bit as well, but it's also what's interesting as well is the shale rig count. That's increasing sort of pretty much week by week, certainly as oil has sort of crept through that $60 a barrel. Interesting as well, just if you've been watching the cryptocurrencies, Bitcoin is now down to around 7,000. At its peak, it was close to 17,000. Now, again, a lot of people have been trading these sort of cryptocurrencies, especially Bitcoin, on margin. And what's happened is, obviously, with the recent falls, they've been getting their margin calls coming through. And what's been happening is, they go to where liquidity is. And obviously, that's sort of stocks and currencies. So that's maybe another little reason as well where you're seeing some of the sell-off out there as well, as people are looking to scramble to cover their margin calls on their on the Bitcoin trading. As the market doesn't go up forever, it has come down and come down really pretty hard and pretty aggressively, and they need to make these margin calls. Closer to home here in New Zealand, we've got the Reserve Bank laying out its sort of intentions for the year and sort of guidance for the year. At present, it looks like rates are on hold, but let's say it could be very interesting if the US do put up rates in probably March, as they will do, and maybe again in June. That'll then put US rates higher than New Zealand rates, and it'll just be interesting to see if New Zealand sort of really gets dragged through with a rate increase towards the end of the year. Again, certainly New Zealand, the press has made a lot of this and sort of pretty much blown it out of proportion, really. A lot of focus, obviously, on KiwiSaver. You've got to remember, KiwiSaver is a long-term investment. Really all the Dow has done with the recent fall is take it back to where it was 2 months ago. If you're investing in KiwiSaver, you're potentially looking at sort of 10, 15, 20 years down the road. The odd sort of minor blip doesn't really have too much impact. It's a regular saving contributions that make the difference. And really shouldn't get panicked into doing anything, sort of taking out of a growth portfolio, for example, into a cash, especially if you're sort of 20, 30 years of age. You've still got 35 years in the market before you're going to be able to access those funds. So if you are nervous about your KiwiSaver, give us a call on 0800 867 323. Or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.